Welcome to TradeTheMBI.com. This is John. This report is for the 23rd. Well, wasn't enough to sustain things. We could see with the red leading that there was going to be some trouble. And sure enough, that discussion we were having about the steel being pretty exceedingly up there. It's a big difference when it was, down below in the negative 13.5 and things looking weak. But, it used everything it had to hold that support range as it did, and it was enough. Now, still, magenta over yellow, still rising. So from that standpoint, still a little bit positive, but partial rejection right here. DOC with the cyan popping up just a little bit, but you did get the crossover of red. Orange did dip below. That just means you're probably going to get more back and forth like this. It just usually continue. A pivot down of the magenta is really kind of that death nail in the 23%, and then you'd be looking for the zero, particularly if white MBI continues to rise, because that would be shorts really strong in there, and we'll see it on DOC from a steel pivot lower. So kind of similar construct. From an NQ standpoint, pretty much the same story. A little bit better separation. Interestingly enough, though, you get the green crossover. So that's a bullish crossover from the NASDAQ standpoint, not from the ES. So a little bit of a divergence reading-wise from that standpoint. So will that be enough to keep the S&P from breaking down, and will that be sustainable, or will we see a spider where the pivot back down of green takes place? That would definitely put a serious problem as far as holding that 23%. Oops. So we can look for that one to be the critical move. But at this particular stage, you got a positive read with still that negative bullish. Now, if the red pivots back below magenta before the magenta does, then fine. Yeah, we'll probably see a continuation of it, but it's tenuous at best, and I think the 50K and that's really going to reveal the best of it. Flight into treasuries, thought it had gotten a little too far, and this is still a bit out of range. I think that 95 to 96 range much more appropriate at this given time. This is an expectation the Fed's going to continue to keep tightening. I don't know that they would necessarily need to, particularly if they see slowing. They can be a lot more cautious now, having built up quite a bit. They're really not all that afraid of inflation running at middle tones. Really, the critical aspect for them will be watching how long oil stays up and above that 80 range. If it can start to decline again, fantastic, but it's looking like there's potential for a bullish turnaround right at this level, at least maintaining 80 or above. And that gets problematic over time, but in the immediate near term, not so much. Euro sort of took a dump, big shock there that it's held up as well as it has. It's still pretty fantastic. Still plenty of room. I mean, they got all the way to that 106 range before things get dicey in the Fed, and then we'll all have to chit chat and talk about what they're going to do to try and support things. But that's then, this is now, and for now they've got enough cushion built into it, so they're okay. From a gold standpoint, still popping up a little bit, which is interesting given that you're seeing a little bit more money going to treasuries. No corresponding support into the crypto, and Bitcoin just about to touch that 0%. No surprise with that one. That weakness was built into that setup. An MBI white lead has been darn impressive. The read from that peak, pretty easy. ETH breaking from that previous low setup, but pretty equivalent to where the Bitcoin is on their break of the lows. And if you look at that line going all the way back, it's to that initial breakout as well, and it goes all the way back to March. So I mean, that's literally much to do about nothing for crypto and all the excitement that was kind of building. So here's our big decline that we've had the last week. We had a little bit of a reprieve. It's not a heck of a lot of reprieve before it started to fade a little bit, but that's the beginning basis that they held on the 50%. Any weaker than that, and that would be more problematic, because you could still argue this ABC kind of move ready for another spike back up to test that 4,400 range. And a little tougher here with MBI white leading. It's going to be a little bit more muted, but certainly a pivot lower, and magenta maintaining that yellow above. A pivot lower here, magenta is just Yeah, it's a nightmare because then you're headed towards the 0%. That's literally clear indication of what that is. So we look at it from the early morning. We had the nice pump. Everyone was all excited. And all of that pump, though, even early on, began with positive extremes, going back, all the way here, and then further back, even to right about there. And so as soon as we got just at the pre-market, boom, it was just a continuous sell-off. And then that progressed even further. A little break at the end where some short covering took place, but even that short covering wasn't enough to really sustain a significant move. And this was the question as to whether or not there was going to be enough new buyers to really keep things going, and it didn't. At least from what we were seeing from the DSC with the steel elevation levels, didn't think they were going to show up in strength to do much of anything, and it was really going to be whether or not the bigger buyers were interested in picking up the slack, and as it appears, I think they probably want a bit more of a discount before risking it, especially with treasuries where they are. It makes it really a complicated decision to want to be into stocks when you can get a significant yield out of treasuries at this particular stage, something they haven't seen in a long time. So I remember when they were so excited about getting 1% and 2%, and it was like a thrill. Things have changed dramatically. So update also on news. I'm going to be taking a little vacay. It's getting into triple digits here in Florida, so I'm heading to the beach. So you won't see me for the rest of the week, but continue to follow those readings. I think we got a pretty good, clear read on where things are at and what the break points are. So I would continue to look for those, particularly on the ES when it comes to this MBI pivot setup from a daily, and that will really be telling sign in any pivot lower two of that DOC green midterm buyers below the red would definitely also really add to it. When you get them in unison is where you really get that super strength. Otherwise, you get a lot of flux in between where you can see strong rises and then big declines. So that's the long and the short of it for now. As always, though, trade well. We'll talk again later.